We're here today with Shan Gastineau, Managing Director of Jones Lang LaSalle's Corporate Finance and Net Lease team. Shan, you've been in the industry for more than a decade and seen many of the ups and downs in the market. Tell us, since the recession, has there been a great demand for single-tenant net lease investments? Is there an appetite for this property type expected to expand over the next few years?
Once the recession really was in full throat in 2008, clearly there wasn't much of an appetite for net lease investments, for that matter, much of anything other than commodities, other than treasuries. And then when the market hit the bottom in March of 2009, the stock market, certainly an appetite for stocks. Beginning in late 2010 and early 2011, investors made it clear, simply because the Feds had made it abundantly clear on their part that they were going to keep yields extremely low through deep into 2014, that investors wanted yield. And in chasing that yield, where they found it most were in high-grade corporate bonds, munis. They certainly were looking for it in high dividend-paying stocks and preeminently in high-quality real estate. And the places they found it most were in the public sector and REITs, which have been an incredibly hot category in 2011, and certainly in private real estate. The greatest expression of that private real estate probably in the net lease category. Single tenant, high quality, good credit investments, whether office, industrial, and putting their money to work and chasing yield.
Well, looking at the Southeast region, how strong of a sector is corporate finance and net lease?
It's really hard to argue with the future demographics, the powerful demographics that the Sun Belt has been experiencing and will continue to experience. Of all the regions that backed up, certainly the Sun Belt in the recession was hit very hard in the real estate sector. You obviously had Sun Belt states like Texas. I don't know that we'd call Washington and Northern Virginia Sun Belt, but regardless, that's been a hot real estate sector. Texas has been hot. The top 2-3 tier markets in the United States. But generally the Southeast has suffered, Atlanta preeminently among those. However, that is beginning to turn. And again, as I mentioned, the powerful demographics are going to be the driving force behind that. Probably, my belief is that where the educational base is powerful and is strong is where people are going to be spending their money in high quality real estate. That's going to be Atlanta, that's going to be Charlotte, that's going to be Raleigh-Durham, it's going to be Nashville, maybe some spots in Florida. But I'm excited about the prospects of the real estate turnaround in the Southeast particularly.
Are you seeing any growing demand from the buy side or the sell side right now?
The demand is really extraordinary in the net lease world. And again, primarily because they're chasing yield. And as I said earlier, the Fed's determined to keep their rates low through 2014. I think we all know intuitively, as well as just the obvious in the economy that we've studied in the past, that we're going to have to deal with inflation. Maybe not inflation until sometime 2014, 2015, possibly earlier, but more likely not until then. And when that happens, you're really going to have a few options. You can continue to put your money in stocks, that's an option. You could probably put it in commodities, but commodities aren't going to give you a yield. So if you really want yield and inflation protection put together, you're going to have to find that in the real estate market. And again, the greatest expression of that's going to be, quite frankly, in the net lease environment. That's what we're anticipating, and I expect it, even though it started now in late 2010, encouraged and really got a lot of momentum in 2011, it's going to carry right on through to the greater part of this decade.
Shan, you moved over from representing tenants to now working with owners and investors in the capital markets arena. How does your background in tenant rep benefit you for your new role in CFNL?
Well, about half of what our team did was deal with corporate users of real estate that owned their assets, the other that leased their assets. The question was always the same. Is our money put best to work, tied up as capital in a fixed asset like real estate, or do we put it into our business? Is there some better place that we can utilize this capital? Again and again, owners of corporate real estate in the tenant rep group, we learned quickly that it was an argument that carried on often and never really got a good conclusion. And we think that we're going to hear the same story over and over, that we don't want to own our real estate. We want to own those things that are core to our business. Real estate isn't what we do, and it isn't what we do well, and we're going to want to redeploy that capital into our business. We're hearing that more and more.
Shannon, really appreciate your time today. We really look forward to your contributions here at JLL towards owners, investors in the capital markets arena.